Most people do not achieve the returns that the indices imply. So when you invest in stocks, it's very likely you're not going to make those, say, 7% per annum. And when you invest in cryptocurrencies, it's also very likely you're not going to get your 10x every 4 or 5 years or so, right? What Bitcoin basically implies. And why is that? I think it's because of 3 reasons. The first reason, it's probably the smallest contributor of this, but still the reason is because of fees, right? You have to consider if you get in and out of the market, you pay fees. If you hold an ETF, you have fees, or if you hold a stock fund. So you have to look at fees. That's the first reason. It's not the main reason though. The main reason, this is now the second one, is it's market timing. And why do most people actually time the market that poorly? I think it has something to do with social dynamics. How do people get into investing? It's because of attention, right? When you listen to the media, people talk about new all-time highs. When you talk to friends, people tell you how they've made money with a certain investment. So when you hear these success stories, you don't want to fall behind, right? You want to at least be part of it. And so you also join the crowd. And so then the subscriber numbers of those different YouTube channels, they go up. All the attention on that certain asset class goes up. And so the prices also rise. But that only happens until all of those people that were remotely interested also onboarded. Once they've got their brokerage account, once they've got their Coinbase account and they made their first investments and no new people come into the space, then the growth stops. And then the people that bought earlier on, that already were interested in this before all the hype came, they offload, they take profits, they then depress the price. So what's the typical kind of experience most investors have? They just get into the game because it's so interesting, as in there's so much hype around this, and then they simply just get dumped on by the people that came in earlier and they lose money. So that's usually what happens. And so you don't get the average return that's implied by those price charts because the average attention on the asset is not monotonically at the same level. The attention is high when prices are high. The attention is low when prices are low. And so you start investing when prices are high, and you might or might not sell when prices are low. If you're selling when prices are low, then you've even lost, right? But at least if you're onboarding during hype times and you just maybe invest for 10 years or so, you're not getting this average return because it's likely you're onboard during the hype time. It's unlikely you're onboard during the bear time. Right now, the subscriber growth of this channel is pretty much at 0. We are now at 24K subscribers, and that has been the case for quite a while now. So that's the second reason, right? Most people time it wrong, and they don't time it wrong because they're so stupid. They time it wrong because of social dynamics of how attention on an asset class is formed. Attention increases when price increases. Nobody is going to talk about crypto or is going to share stories around crypto with their friends when they're down by more than 70%, right? But everybody is so happy about their gains when prices are up. And so that's then when the word spreads. And that's then when the average prices are high. So that's the second reason why most people fail. The third reason why it's unlikely that you're going to get the same kind of returns that are shown with these indices is because the likelihood is high that you don't just try to get the index return. And again, that's a psychological reason. Most people think they are above average drivers. So when you ask people on the streets, do you think you're better than average driver? Most people say yes. But obviously that's not the case, right? There can only be half of the people that are above average. And so the same is true for investing. Most people think they can outperform by picking stocks or by picking the altcoin. And only very, very few people can actually do this, right? If you can do this, then you will have a Warren Buffett or George Soros, right? Then you've got the real strong outperformers that make a lot of money, incredible money amounts that you can't even count. Most people don't achieve this. If you pick a stock, just a random stock, the likelihood of you outperforming is below 50%. Because it's the same with crypto and stocks as it's with life. 20% of people get 80% of the gains. So if you just pick randomly a stock, there's 80% likelihood that you actually underperform the index, that you're underperforming Bitcoin, that you're underperforming the Nasdaq 100. The likelihood is very, very high. So what makes most sense is to have the self-awareness. Are you among the very, very few people that are able to identify the very, very few outperformers? Have you really made very deep research on, say, 20 companies or 20 altcoins? Very deep research that most people haven't. And have you then only decided to invest maybe in 2 of those assets after making deep research on 20 projects? If the answer to this is yes, right, you've invested all of this time, then you might be able to outperform. But if you haven't, then it's very unlikely. Then it's much, much better to just go with the ETF, with the benchmark ETF, and let basically, due to this mixture of the portfolio, rise together with the average, because you then always have bought at least parts of the winners. So that's how I see it, right? The way to avoid underperforming is to minimize cost, is to stay around when there's a bear market, and to actually double down when there's a bear market, which is very hard because you have to go against the general masses. Ideally, also to sell when there's maximum hype, which is even harder because, let's say for Bitcoin, right, you suddenly 5x or 10x your money. That's kind of like life-changing money. Everybody else around you tells you, oh, it's going to rise further. You see all the excitement. And then you have to pull the trigger to sell, right? When maybe another 2x would even feel way, way greater. You're now in another level of wealth compared to what you have been before. So selling is even harder. So you have to do this. And then you have to be self-aware enough to only take the amount of risk that you have mitigated, or that you have balance out with your research, right? So if you have done enough research, if you've done hours and hours of research, and you really think after researching all of those 20, 30, 40 different altcoins in a lot of depth, that I found the 1 or 2 gems where I'm willing to bet on heavily, then that might work out. Otherwise, just by watching 2 or 3 YouTube videos, you're probably not going to be among the very few outperformers. So why even attempt it when most people don't achieve even the benchmark? So one thing to look at, right? That's the way how I personally approach this. I try to stay as active as possible during the bear market, even though it's not very encouraging, right? When you make a video now, you get way less views than in a bull market. But winners are born in the bear market. That's how I see this. The people that stick around, that hunker down, that learn new skills, that learn how to analyze the blockchain, that find new sources of information, those are the ones that then can benefit from the next hype. Those are also the ones that create the new bottom in the prices, right? They continue to dollar cost average in. And then when that happened for long enough, prices will have risen enough for the media attention to come back again. And that's then when we take advantage of all of the knowledge that we have accumulated, take advantage of the large positions that we have built up, and where we then actually can hopefully outperform, at least by market timing, and maybe even by having more skills than the average. But yeah, don't be discouraged because things are down. Rather double down now. Bet heavy on the next rally. Will the next rally happen in 2 years, or in 5, or in 6, or in 7 years? Nobody knows. Ideally, you can be flexible on this, right? So the best way is to not be dependent on the money at all, to have the regular income or the regular savings where it doesn't really interfere with your lifestyle, and to just do all of this investing stuff to maybe then up your lifestyle, right? Maybe go a level up. But that can happen at any time, and it doesn't really matter that much if it happens in 5 years or in 2 years. That's how I personally do this, and I think it's the way to go, to not be part of most people that are losing with investments. Hope that was useful. Another interesting similar kind of talk, if that was interesting for you, another similar kind of talk. So over here, hope to see you in that video, and thanks for watching this one. Bye bye.